All right, everybody, welcome back to another week, another Commitment to Traders setup. I hope you're ready for your red pill this week, everybody. Here we go. So this week, we're going to take a look at cotton. Cotton is set up for longs using the Commitment to Traders trading strategy, and I'm going to show you why. So starting as always, where do we start? If you've watched my channel, you know the one indicator to rule them all, the Commitment to Traders commercials index. With the 26-week look back, we see relative to the last 26 weeks of positioning, the commercials are extremely long. And that's bullish code number one. Bullish code number two is the extreme in the net positioning. So I'm going to switch over here to a different view and show you just how extreme they are. The red line down here is the commercials net positioning. Now, what do we see? This goes all the way back to 1985, and what we see is that the commercials are more long than they've ever been the cotton market. So that is incredibly bullish. This is very rare do we see an extreme like that. And let's take a look at the last time they got anywhere near this extremely bullish, and that was way back here in 2019. And what I notice is, first of all, we're more bullishly positioned than we were back then. And also, what do we see? Price is actually higher than we were back then when we were this extreme, or when the commercials were that extreme in their positioning. So the commercials rather, are even more bullish at even higher prices. What we also see here, the blue line, and this is the large speculators. These guys are trend following in nature, and they get a huge position on towards the end of a move. And what we see here is they are the max short they've ever been. Last time they got anywhere near to this short was back in 2019. So that is incredibly bullish. We want to pay attention to the Commitment to Traders data when we get to historical extremes, which we can see on this net positioning line. It helps us visualize extreme levels in positioning that have happened in the past. And when we revisit those levels, we need to pay attention. So going back over here, we're going to take a look at open interest analysis. So the black line down here is open interest, the interest in the market. Who's interested in the market? Now, when we see open interest is increasing, we have to ask ourselves the question, who is driving the open interest increase? And if it's being driven by the commercials getting more long, like we see here, then that is very bullish. The people that are interested in this market are the commercials, and they're getting extremely long. So long that they're more long than they've been basically in the entire history of this cotton futures market. So that is a bullish code as well. Now, we like to compare the price of an asset to the price of other benchmarks like gold, the treasuries, and the US dollar. What we see here, the green line, cotton is undervalued relative to the US dollar. Cotton is undervalued relative to gold, the gold line, and cotton is undervalued relative to the price of the US treasuries. So that is a bullish code as well. So then we want to pay attention to the ADX. The ADX is the end of trend indicator. So if this thing gets up over 60, we are close to the end of a trend. So I'm just going to put one more line on here and make it 60. Bear with me. And what we see here is that we are over 60. This is a significant indicator. It's an end of trend indicator. Basically, when this gets up over 60, whether the trend is up or down, which in this case it is down, this means that this market is going to have a turnaround of some significance very soon. What would confirm this is if the ADX rolls over, or if we see the large speculators start to cover their short positions and start going long. And we can tell that over here. And I'm tracking it with a 13-period moving average. This is the positioning in the blue line of the large speculators. When this starts to turn up, and especially once it breaks the trend line and gets above the 13-period moving average, that'll give us the green light that for sure, this move that we're anticipating is underway. So that is something that we just need to keep our eye on. Now, with this setup, interestingly, we do not have seasonals in our favor. So this blue line here is the true seasonal tendency for cotton. We see that cotton typically comes down from February to July. So seasonality, the true seasonal, is not in our favor. That being said, if you follow my channel, you know that seasonality is one of the last things we look at. If the positioning is not in alignment with the seasonal, we don't pay attention to the seasonal. positioning tells us what real people with real sums of money, with real brains and knowledge of this market, are positioned heavily with huge long positions. It doesn't really matter what has happened in the past. We pay most attention to what's happening in the present, which is what's present in the COT data. Okay. Now, another thing that's interesting about the cotton market, which I want to point out to you, is the small speculators positioning. Now, small speculators in the cotton market are usually, well, almost always, we want to fade these people. When they get to extremes, we want to fade them. We see back here when they got really, really long, the green line, this is the small spec index with a 26-week look back. It was a good time to sell when they were getting very bullish. See, when they got very bearish, it was a good time to get long. Again, when they got overly bullish, it was a great time to sell. And now what do we see here? This is different. We have a market going down at its lows, and we see the small speculators are very long. So what I think could be happening here, and I actually talked about this in my Discord a few weeks ago, basically when they started getting into this zone, is that we might be seeing a small spec squeeze before we get this move. So what that means is these guys are trying to pick the bottom. And these guys are very rarely right. I just showed you a few examples in the past where they basically always get it wrong at extremes. But what we do sometimes see is this crowd is trying to pick a bottom, and they're not the best at that. So they might get it right this time. I just wanted to point out to you, this is unique this week, is that, or in this setup, and this doesn't happen very often, where we see the small specs are actually trying to pick the bottom here with the commercials. So that's not bullish. That's in fact what I would call a selling code, but it's flying in the face of the rest of the setup. So we might see a further squeeze down, but considering the fact that the commercials are at a max long position of all time, and the large speculators are max short of all time, I am willing to look past this and look towards this actually being a good market to go long. Now, we also see the spread is holding up. So what is the spread? So the spread is the difference between the front month and the next month out. So how I find that is I go into barchart.com, find the market you're looking for, find the front month, which is you can tell that by the open interest and the volume. So the front month is the March contract. The next month out is May. So you go into TradingView, create a chart, you add a second pane, and in your second pane, you create a line chart. And then you go in here in the inputs, you just put, in this case, CTH 2025 minus CTK 2025, which is the front month minus the next month out. That gives you this line. This is the spread. And what we see is price has been going down, but the spread has been holding up. So what does this tell us? The spread is holding up for one reason, and that's because commercials really, really want the front month more than they do, not more than the next one, but they're willing to pay a premium for it in order to take sooner delivery. Now, we're not quite into a premium. If we were in a premium, the spread would be up here above zero. So we are still in a carrying charge market, but what we see is just the relationship between the front month and the next month out is showing us that there's actually a decent amount of demand for this front month contract, which is a nice thing that we like to see in alignment with the commitment to traders setup. Now, we also have some measures of accumulation showing that this market is being accumulated, and we already know who it's being accumulated by because we see the commitment to traders setup is showing the commercials are extremely long. So what we have is we have the insider accumulation distribution index showing major divergence here. We've been making lower lows in price, while the green line, has been making a bunch of higher lows and has been failing to go lower. So what would confirm this accumulation being triggered would be as if we break this trend line here on the indicator. So we also have, I believe we have ProGo accumulation as well. So we'll go over to ProGo here. I'll minimize some of these other indicators so it cleans up the chart a bit for you. So here's the ProGo. The red line or the orange line is the professional line, and the blue line represents the public buying. And basically what we see here, I'm going to look at it on the weekly first. We see some divergence here on the weekly, which is very powerful. So this market is being accumulated by professionals. Now, mind you, the professionals are still below the public line. So this basically tells us the public's trying to drive the market. They're trying to buy this dip at the wrong time. And this move will really get underway once this orange line gets above the public line. But let's take a look on the daily, because that's a primary time frame we use to measure accumulation and distribution. What we see here is price has been making a whole lot of lower lows while the accumulation is there. We see the professional line going up above or making higher lows. So again, similar to what I just described in the weekly time frame, is once this gets above the daily line, we'll see that the professionals are in fact in control of this market and buying, and we should see a nice rally come in cotton. Now, to be clear, these are setups. This is a setup. It does not suggest that we should just blindly long this market. What it means is if we get a confirmed trend change on the daily via a variety of technical methods to get long, we'll take the trade. But until then, you just sit and wait. So setup does not mean just blindly trade. So if you enjoyed this video, if you're interested in Commitment to Traders trading, make sure you hit me up at tradiustrades@gmail.com. I can send you a link to my private Discord where we talk all things markets. Great crew of people in there, and I share all of my insights all throughout the week on the markets, mainly Commitment to Traders and some market structure, price action, trading strategies. Hope you guys really enjoyed this video. I think this is a great setup, and wish you guys a great week ahead. Thanks for listening.